Hello, my friends. Hello. I'm here to let you know. How's everyone doing? Mike, Blake, internet stuff is very aggravating, like trading isn't enough. Hiya, Bran. No, my charts speak to me. Hey, everyone, when you look at your charts, do they talk to you or do I need to be committed? What do you guys think? Ryan, think I need to see a professional?
Hey, there's 40% off if you want to see a professional on our coaching site, Dale.
Oh yeah, I need the other kind. Vladko, welcome to Face, and Brand says they talk to him too. So there's at least a couple of crazy guys in here. And Paul Blake, new name. If this is your first day, I bet you're going to want to stay. Oh, Sinatra's a shrink. All right, let's talk about the markets. So I know that you know, this is the area I wanted to buy it, but I just am hesitant about this little sideways action here. It's not the kind of action I wanted to see here. Plus, I still think Canada has a little more upside, maybe to the 200-day or so. So, Euro looks like it's on track, like we were talking about, and I've been talking about for a while. Maybe we try these fib levels into ECB, and cable's still outperforming as expressed in euro pound. Sure looks like new lows are a layup to me here in EG. How about you, Ryan?
New lows, do you mean
Oh,
intraday
under eight,
or
84.
84? Yeah, I don't think it gets through 84 on the first hit.
Okay.
Not market. I might even think about, I'm still small short from 86s.
Yeah.
I might have a little turnaround if we test that 84 level again.
Just take
Um,
the stops out and look for a turn then, maybe, huh?
Yeah, well, previously we had a move under 84 down to sort of 83, 85 ish. So I'm
Yeah.
not ruling another move out of that. I think it needs to clear 83.80 and then confirm a break before we see further downside.
Okay. Um, so, with EG looking like it's going to make a new low, it doesn't make me feel like I need to be in a hurry to buy euro yet.
No, it's looking a bit iffy. It's a similar picture to that Aussie you just shown. It's come
Yeah.
down. It's finding support around this 25, 30, 40 area, but the bounces aren't looking strong at all, are they?
No, they're just holds
Yeah,
instead of bounces.
and that's never a
Um,
good pattern, is it? When it's just
no.
holding and bouncing weekly, it suggests that we're going to see some downside
Yeah, I
if it
mean, a
breaks.
great example of that was here in the S&Ps. At least
Yeah,
we had an update, but it really wasn't bouncing. It was just holding,
yeah,
because every bounce got sold into.
and then wallop.
So are we going to new all-time highs here?
It's got some steps to climb. We've got to get above that 55 level. That's the
Yeah,
main one.
that's a
And then it's got to get above just where your cursor is now, 55, 55, 60. If
yeah.
it gets above there, we're on for the highs. And then all the bears are going to get smoked out again.
Don't you think they got smoked yesterday?
Yeah, a little bit. But if you're
Yeah,
short at the high, you're not that worried yet.
yeah, that's true.
Um, So yeah, I think above 55, 55, 60, then any shorts up there are going to feel a little hot in the underpants, shall we say? And
Yeah.
if we get up there, I'll then consider putting in some buy stops through those highs.
Okay. Just a note, we are getting ready to press new lows in crude, and natural gas is moving in the opposite direction. So that's distinguish a difference between that. Nat gas looks pretty good to me. Crude, I'm almost tempted at new lows to try something. Um,
I'm already in Brent UKL. I'm trying
okay,
the the support down here, because it's quite a support area. Again, you got to look left quite a bit, but it's quite the support area down here. So technically, I said I'll give it a go, which I'm doing in Brent. But fundamentally, we're probably seeing that tick up in nat gas because of this storm moving in, but oil's certainly not budging on it.
Yeah.
But that oil again, we're having three little lows down there, which tried the downside. It's holding, but the bounces are still weak. So it's a bit of a coin toss. This one, you got to go whichever way it moves.
Okay. And I think
Yeah.
I
And
think
Dale,
An-
good morning. Good morning,
I
Dale. I
think
was just
Andre
what's
has a deep crab pattern down here. You want to show? I was going to show it. I'm glad you're back up. Like, yeah, go ahead.
Oh, so he has a deep crab pattern. Well,
I think so.
I can show it, and I'll take over for a few minutes. But if for some reason I drop off,
Right.
you guys
I
know
know.
I've got internet issues right now. But I guess I was just putting together a tweet regarding the crude oil market, and since you guys are talking about it, I thought I'd just show you. I uploaded the chart. Well, I uploaded the chart via ForexAnalytix last night, but I didn't get the whole picture because it was hard to squeeze it all in. It makes it too squished up to do that. But this is the support that I see on crude. Ryan, I don't normally look at Brent, as obviously as carefully as you do, but as you pointed out, there's a lot of support down here too. But isn't it scary how the price action's not there? Like you're just seeing it trade so heavy. It's,
Yeah.
you would think value, traders would be down here trying to pick some up, but scary, right?
Yeah, this is a typical time where it's the fundamentals versus the technicals. And 99 times out of 100, the fundamentals will win out over the techs. So my trade's not looking all that, but it's holding. So that's one small positive I'm taking for the moment. And if it holds for any length of time, then that's maybe when buyers might come in and go, actually, we're not going any further down. So either shorts are going to start packing up or we'll see some longs coming in. But yeah, the fact that it's not even bouncing much on this storm news in the US, which I'm not expecting. I'm not trading it to get a bounce on that. But if things are shut down for an indefinite period of time over the storm, then you can see it all move higher. But it's not even bouncing on that. So the fundamentals are really taking over, and they're pretty short at the moment.
And this is the chart you were talking about, Dale, right?
Yeah, I saw it on Twitter.
Yeah.
Yeah.
You can find it here on ForexAnalytix too.
Yeah, I know. I went back and checked it. So he still sees lower lows coming here for that crab pattern.
Well, I mean,
Oh,
I
the arrow.
think that because we're here, he's probably going to be updating it soon because we're at the inflection point. So,
Okay. Yeah.
so he's like, buyers are to emerge somewhere around here,
Okay.
and they are, but where are we going to go from here? I mean, like buyers are stepping in when they should for this pattern,
Yeah.
but that doesn't mean that it's going to hold. And that's where you go back to what Ryan just said. This is why, people that avoid, the fundamental reasons why things are doing what they're doing, it's completely ignorant, in my opinion. And because anybody that I've traded with on a much higher and professional level will tell you exactly what Ryan just told you. Technicals matter until they don't. Technicals will give you a good guideline, but when there is a reason why something is happening, a technical pattern or a level will end up just being a speed bump along the way. And that's when you can throw anything that you've learned in the markets as far as technicals go, just toss them out the window because they matter until they don't. And when they don't, you just get the hell out of the way. And that's the scary thing about crude oil is you're looking at crude going based on everything that we know and anything that people have been talking about for like the last, especially from a macro point of view, for the last like several months, really hasn't, translated into anything. And now you've got price that's just actually just bearish. And these technical levels are holding for now, but you have some sort of recession or economic slowdown globally, crude's going to be trading sub $60. And then it's going to be more of a positioning story. So I don't know. It is definitely trading heavy, and it's worth noting. Dale, I'll pass you back over the charts if there's a couple other things you wanted to go over.
I think I covered a lot of the things that I wanted to talk about. I wanted to ask you, Blake, do you think we're going to new highs in the S&Ps after what happened yesterday?
You know, I don't know. And I'm fine with giving that answer.
Yeah, I am too.
I don't know. What I do feel like is the pivot is going to be right here. And so that's the 618, and that's the previous support, and it all coincides with several different levels. So in order for me to be convinced that this market is actually on track to hit new highs, we have to break above this level.
Yeah,
And so it's a 618 retracement. I don't think that there's, I don't think there's anything else to really identify more than that level right there. And, if or when it's broke, you know, it, if or when it's broke, then you have to realize, why is it breaking? And is there argument for further highs? We are only what, 3% off the highs, all-time highs, three
yeah,
three and a half percent, somewhere, something like that right now. Yeah,
yeah.
3%. Well, maybe 3.5%, because you have to go all the way up here. So I mean, it's not far away. I feel like you need to sell into strength, but I think it has more to do with the FOMC. And then don't forget, we also have our favorite situation happening tonight, Dale. I can't wait. I'm going to grab a big pile of popcorn, and I'm going to be watching the debate. How about you?
Uh, they asked me to moderate.
They asked you to moderate. Well, I'll tell you what I'd rather do is I'd rather stick a quadruple pronged fork in my eye, but I am going to be watching the debates regardless. So yeah.
I actually heard a comment that the market may react to some of this stuff um, during the debate,
I think,
especially if it's policy.
yeah.
Like taxing unrealized gains, um, unrealized capital gains, things like that.
Sure. And people are going to be looking for how well Harris underperforms, or
Yeah,
how well Trump performs, if Trump can hold his cool, and I think you're going to get a lot of reaction based on who the market thinks is, the overall, winner of the debate stage. I think,
yeah,
and I think it's, pretty binary as far as the stock market's probably, the futures are going to go higher if Trump is, comes away looking like the stronger candidate, or vice versa. And then
okay.
yeah, I think you're right.
All
Start
right.
talking about
Well,
capital gains, and you know,
yeah,
it could move the market, but I think ultimately it's going to be, who, who
yeah,
looked like the stronger candidate. And the other thing I guess we need to talk about too is, how's the dollar going to react? Because I think the dollar goes down on, either candidate, to be
yeah.
honest, but I think the market doesn't necessarily view it that way, at least not initially. Initially, I think Trump would be better for the dollar, and Harris would be weaker for the dollar. But anyway, what are your thoughts, Dale?
Oh, well, I'm going to be patient, and when it comes to the dollar, it hasn't quite gotten to the zone. I'm thinking the dollar is going to be a broad sell post CCB. Just a guess. So that's kind of, Euro's kind of been the weakness. Aussie's starting to dig in its heels, so Aussie might be the first thing I look at, or a Canada short. So we'll see. I just don't think I think we're in like the middle of something instead of waiting. Maybe it'll be the inflation numbers this week as well. If they don't come in squishy, we could get a pop in the dollar.
So let me
But
ask
I'm
you
very, I'm
this.
long-term bearish. I'm looking for 115 euro on the
Yeah,
next
okay.
rally.
I mean, you've talked about that quite a bit, and you've talked about like wanting to sell rallies in the dollar, which I don't disagree with you. I am a dollar bear. So
Yeah,
I mean, and you got to be a dollar bear while we're below, 102.50
50.
ish.
Yeah, yeah,
Yeah, you get back above this triangle breakdown point right here, and then I think you have to stop being a dollar bear. Then you have to say, okay, this is more of a range. We are heading back, probably to the 200 DMA and higher. But while we're
yeah,
outside of this triangle, this has been a
yeah.
basically a year consolidation. We've broken down. This is just buying time before further weakness, and technically anyway. So I'm with you on this endeavor. But the flip side is, hey, if you look at this support here, we break this neckline, and next thing you know, you got a double bottom that actually points a little bit higher than what I would think would take us in a normal recovery. You break that, and we should be trading way up here again. So,
Where
that's that.
103? What's it measure? 103?
Oh no, beyond 103. I would
Oh,
I would guess
oh,
well beyond 103.
oh, yeah, oh, yeah. You're talking, the 104 level.
Yeah,
Yeah,
103.50. Yeah, so we would
yeah,
retrace this entire move. I mean,
yeah.
technically that's what it should do. Doesn't mean, fundamentally that's what it should do. And that's the dangers of
Well, it's not as easy of a trade as it was, at 106 and 105, and
right.
sentiment has switched. So there's a lot more company on the bearish side of the dollar than was even a few weeks ago.
Yeah,
So,
you're right. I look at this as being really tough resistance between 102 and 102.15, somewhere around there. It's gonna be a big battleground.
I'll
Um,
attempt it there and then, put in a stop above it.
well, that's
That's my
that's the
plan.
thing, right? It's
Yeah,
it's all about risk management.
yeah.
It's like I want everybody to be very clear on this. You look at here, and I'll give you a perfect example of what this looks like. I probably am right 50, 55, maybe 60% of the time when I'm hot. And if I'm not, I'm right, maybe 45% of the time trading. But it's all about risk management, and it's all about how you manage risk. Period. End of story. You look at 8 years of closed patterns in play between not only me, but
Everyone
the rest of the team. We average 53% win
hit
rate.
rate.
Yep.
Nice.
53%. The average risk, if you look at all of this, is 8 years worth of data, 8 years this month. All the average, let's see, what is this here? Average risk 1%, average target 3.38%. That is how you can come out to making 300% over time. It's because we manage risk, and that's what traders do. So if you think you're going to be right, 70, 80% of the time, you might be right 70 or 80% of the time, but the
For a
reason why you
while,
don't make money is because you don't manage risk correctly.
you're right. So, superstars like Mark Minervi have like a 50% hit rate. And
Yeah,
he's a superstar, right? So that's a realistic hit rate for great traders.
it is. But even if you hate being wrong, the fact of the matter is the best traders I've ever worked with, the very best that literally don't lose month to month. Like they have a positive P&L each and every month. It's because if they're wrong, they get out. They don't stay wrong. And then they have, an artwork that they apply when they're managing winning trades, which is something that I constantly try to work on. It's like how do I milk more out of this winning trade? But it starts with risking one, looking for 3 or more. And then
That's right.
how you manage that winning trade that you're right 52% of the time or 55% of the time, how you manage that upside in that positive trade is everything. So anyway, I just wanted to be very clear there, because when we trade, you will be wrong. You will be wrong quite a bit. And so it's all about risk management, all about risk management.
The
All
difference
right.
between pros and amateurs. Yeah.
And I will say this once again, because I'm feeling a little heated right now, Ryan. If you ignore the reasons why things are going up or down and you rely purely on technicals, it's like trying to drive 100 miles an hour with one eye closed through traffic. You're going to die. Period. End of story. Anyway,
Wow.
Ryan, what are you looking at today with those positive comments about trading?
What an uplifting message, bro.
That's, hey, who else is going to
I know.
speak to you like that? Who else is going to tell you the way it is?
You're like our father.
You're gonna get people like, oh, I make money every trade. Oh, look at this. No, it's not reality, people.
I know, buddy. I'm kidding.
But anyway, all right.
There's worse horror stories than
Ryan, so tell me what you're looking at today.
Well, just before that, it's funny you mentioned that, because I'm just having a conversation in the Q&A here with Jonathan. He's put up some questions that are sort of pertinent to what we're talking about here. We say it all the time. So I just want to echo your point. We're not here. We analyze markets. We look at markets. We tell you what we're looking at, how we're going to trade stuff. We're not here to give you trades and tell you to buy this, sell that, the other. The goal that you take from here, the lessons that everyone should take from here, is how we manage a trade. And Friday was a perfect example. You were trading one way in dollar yen, I was trading the other way. We were both making money. What we were both doing is managing our trades properly, so that when they went offside, or when we saw enough profit, or when they went against us, we knew what to do. And between you, me, K-Man, Gregor, Dale, whoever, that sentiment, that training, if you like, that experience in how to manage trades is all the same. Our approach to risk is all the same. That's the one thing we all align on, and what all good traders align on, that they can manage risk properly. The which way a price is going is the fun part. Managing your trade is the boring part, but you get the boring part right, you can trade anything you like. So it's not about, oh, I think oil's going up. I'm trading a technical level here, and I know I'm trading against the fundamentals, and that's reflected in my trade size and my risk side. I'm not gonna be offside $20 and start screaming, oh, is it going to come back? I know where my pain level is, and that's what traders should take from this show, the flow show, our chat room, everything. And the pips in play, all that, just like you highlighted. You've got to be right in your management. Get that right, get that consistent, you'll make money. It's the be all and end all of it.
It's interesting. Yesterday I got to listen in on a conversation with one of the traders from the Market Wizards book, and the original Market Wizards book, like the very first one from Jack Schwager. And obviously this gentleman's been in the market for nearly 50 years. And he said the exact same thing that Ryan just said it yesterday.
Ryan's a wizard. Jack hasn't met him yet. Anyway,
100% true.
Huh?
That's 100% true.
Yeah, I mean, some people are just famous, because they've been written about. But there are probably many wizards. Like Jack even wrote that book, Undiscovered Market Wizard. So there's always more, under the radar traders than are famous. And really, this is something I think everyone should write down. The difference between pros and amateurs are pros know how to lose, so they have money left to be right with.
There you go.
Yeah.
There you go. Hopefully you jotted that one down. I'm gonna say this maybe, and you guys are gonna have to excuse me. One of the reasons why I'm a little hot under the collar today is my internet has been down multiple times this morning, and that I have very stable, good internet here because I pay for a an actual whatchamacallit that comes to to the
Hardwired
house.
in.
Yeah, I'm wired in, but it has been it seems like they were doing maintenance today, so I'm kind of behind as far as analysis and stuff goes. So I am a little hot under the collar today. So you're gonna have to excuse me. I think Ben said speaking like a true Marine, straight fire with no fluffy feel, good bullshit. That's right. I try not to bullshit around. But I am feeling a little irritated today, and that's the reason why. So I didn't mean to take it out on you guys.
I'd rather have you as a friend than an adversary.
Hey,
Uh, you see that
I just
question
want to
from
talk.
Paul Blake?
What's that?
It's in chat. He wants to know, as a subscriber, would he have access to live Squawk News or is it Reuters?
Oh, this is live squawk right through here. You can see the live squawk feed right through here, and
And
then
yes, you would.
yeah, and one of the things that as a subscriber you should be. This is probably your most valuable place is there's a trades room. Obviously, you can see like where we're in positions, what people are taking, and it's not so you can follow what we're doing. Even though Ryan's pretty adamant, I'm pretty adamant about putting my open positions in here. It's more of to confirm what you're doing, or maybe have somebody go, oh wait, you're short the euro. Well, I was thinking about going long, and being able to ask myself or Ryan or any other trader that you'll find a lot of traders that you respect in here that have been around for the last 8 years plus that will, they're glad to talk about why they're buying or selling something. And it's not just all about, us. And then the general chat room is great. But in the news and research, you'll find like where we all post like what we feel is some of the most important information. Like you can see Ryan posted some analysis from Morgan Stanley and some of the Bloomberg headlines that you might want to pay attention to. So the chat rooms where you're going to find the bulk of the information that you need, and plus you're going to be able to talk to us all day long. Whether it's I'm in there for 15 hours a day,
And
pretty much.
Paul,
So.
if you're we don't disappoint here. You want some Reuters news? We're going to be speaking to one of the editors of Reuters in about 3 minutes. So
That's
it's even
that's awesome, Dale. I guess you do have Jamie from here.
yeah.
From
So
That's
anyway,
awesome.
we aim to please, and
Asking for a you're
it'll be
asking for a
better.
discount.
Yeah, it'll be better than news. You'll get it. We'll be talking about what Jamie thinks of the Fed and everything. So you get a lot of things here,
Right from
and
the horse's mouth. This is
yeah,
great.
go
Hey,
ahead.
real quick, guys. I just want to show you. This is something I'm paying attention to with the sterling. I think this is really important support here while we're above this 130.40 level. It's 38% retracement. See this triangle, the previous triangle support. We're holding it. Jobs data wasn't bad, right? Right, Ryan?
No, it wasn't. It wasn't that bad. It wasn't that
Yeah. I
bad.
mean, look. Go ahead.
I was going to say the wages were mostly in line, which was a little disappointing because I thought we had a bit of a front run on an article that came out last week or I picked up yesterday, and but no, jobs increased. 3 months jobs increased. Unemployment rate came down as expected. So no worries over the UK jobs market just yet.
Okay. So just watch support down here, especially if the euro, it seems like the euro wants to test 110, which makes sense. It's a big confluence. We talked about it the last couple of days. That's why I highlighted this level right here. We got a 38% retracement, a 50% retracement of this longer term move, 38% retracement of this longer term move, 50% retracement of this move. All comes in around 110. So euro looks like it's adamant about testing it. So let the euro slip there.
Yeah,
See how cable feels, when that happens. Cable might
yeah,
trade back down to 130.40, and
that's
then
it.
you have the jobs data behind you, which
Yeah.
again, the fundamentals matter. And if you can match it up with technicals like Angela just said, that's where it becomes very powerful. All right, and for those people that say, "Oh, I don't pay attention to what's going on," that's just being ignorant. All right. So follow
What's
not only
going on?
what's going
Marvin
on.
Gaye.
All right.
He knew
So,
what was
hey,
going on
I want
until
to
his
thank
dad
everybody.
shot him. His dad shot him.
Hey, I want to thank everybody for being here. I know Jamie's here from
Yeah.
Reuters. I want to, welcome Jamie here. But before we go, two things. Our 8-year anniversary savings, it's up for the month. Take advantage of it. People wait all year for these prices, so you get the price. Take advantage of it. And then also with Trader Funding Program, if you guys want to have a one-on-one conversation with me, if you join the Trader Funding Program, I will onboard you and kind of go through what your trading strategy is and see what the best way it might be for you to pass an assessment so you can access larger amounts of capital. So anybody that takes a new Trader Funding Program will get 45-minute onboarding with me. So Dale, I'm going to pass it over to you. Ryan, thank you so much for being here because I know you really needed to be around in case my internet went down. So thank you so much. And by the way, great interview. You had Michael Brown from Pepperstone with you today on the Flow Show. I know K-Man's still out with he's not feeling well. So having Michael there was a really nice surprise for a lot of people, myself included. So if you guys don't listen to the Flow Show with Ryan every single morning and K-Man usually, make sure you are during the European hours. And thanks, Ryan.
Cheers, mate. Cheers, Dale.
Thanks, Dale.
And guys, I mean, ladies, just want to let you know if you want that onboarding with Blake, he's been happily married for many years. Okay.
Actually, actually in 2 days it will be married for 21 years.
Wow. That's 7 threes, man.
Wow. She deserves like a
medal.
award.
Well, give her your give her your
You
Purple Heart.
know what they say here, Blake, you get less for armed robbery and you end up richer.
Say that again, Ryan.
You get less time in prison for armed robbery and you end up richer.
Yeah.
Right, get on with the interview, Dale. Get on.
I'm still trying to figure that out. I need another cup of coffee. Anyway, thank you, Ryan, Blake. Everyone have a good day. We're going to talk about the Fed right now with one of the best Fed watchers out there, Jamie McGeever. And I could ask Jamie anything, which is why I love having a conversation with him. So, Jamie, welcome back. I've been reading some people that think that Paul's making a policy here to be easing here. Are you in this camp? And what do you think as far as the market's not screaming for a half a point cut like it was last week? What do you think is the Fed's action next week?
Hey, good morning, Dale. Good to see you. Good to see you
too,
guys.
buddy.
And thanks for having me back. And yes, you're right. You can ask me anything. Just don't bank on a coherent answer. But let's give it a bash for the next 27 minutes.
Okay.
Yeah, the Fed next week. We had, as you saw, the volatility of last week. 50, is it going to be 50, 25? And at one stage last week, according to my calculations, we were looking at a 60% chance of a 50 cut. I did a piece a few weeks ago looking at previous Fed easing cycles, and as far as I can make out, the Fed never really, and certainly in the modern era, if you go from the 90s onwards, the Greenspan era onwards, the Fed has never started an easing cycle with 50 basis points of a first move, unless it's been in a time of crisis, or unless, in the case of, I think, September 2007, it was well flagged in advance and the Fed actually had 2 or 3 conference calls amongst themselves to decide it. That hasn't happened this time, I suspect, and just going by what the Fed commentary has been over the last week or so, I haven't really seen any indication that they're pushing for a 50, and they seem perfectly comfortable with a 25. I would suggest 25 is probably more likely, and the market's kind of moving in line with that now. Where are we now? About a sort of 60% chance or so, 70% chance of 25. Seems to be more rational, more reasonable. And again, I think if the Fed wanted to steer the market towards a 50, they've had ample opportunity over the last short while, especially on Friday. And had Williams and Waller straight after the payrolls data, which is quite rare to have 2 such heavy hitters coming straight after such a big number, and they didn't give any real indication that they were prepared to go 50. So I think it probably is going to be 25.
How do you think the markets are going to react to that? Do you think they're going to be disappointed and people are going to say that, he's really behind the curve? I mean, we have time till the next employment number, right? I think the next big number is the inflation number out later this week. Is it
We've got
PCE?
inflation tomorrow. Is it the CPI tomorrow? We've got CPI
Okay.
tomorrow. Yeah, I mean, if you'd asked me that question on Friday, would the market be disappointed? You would probably say yes, because we saw, 2.5% sell off on Wall Street, on the Nasdaq anyway. There was quite a big sort of risk off move on Friday on, I think the market was pricing it was going between 50 and 25. 50 was going to be, bad news because, what's the Fed seeing that we aren't? 25 was going to be bad news because, as you say, they might be behind the curve. I think that was just more to do with market sentiment on the day. But we've seen over the last 24 hours a kind of more reasonable reaction, risk-ons back on a little bit, clawing back some of the moves from Friday. I think 25, if anybody's disappointed or surprised by 25 at this stage, I think they've not been paying attention. Really. I think the disappointment or the shock factor, surprise factor, would be if it was 50 basis points. If you want to look further out, I think that's where it gets more interesting, actually, is what's priced into the rest of the year and into next year.
So his presser will be very important.
Not only the press conference, which is always important, but of course we have the revised economic projections on after the press conference or after the decision next week, and they'll be worth watching to see if they raise their estimate for the long-term neutral rate of interest, see what they do with a long-term forecast for the Fed funds rate itself, the unemployment rate. So they'll be worth watching very closely indeed for an indication of where the Fed sees longer-term path of policy. And going by the market reaction, despite all the flip-flop between 20 and 25 on Friday, the long-term outlook didn't really change much. And I'm looking at the screen now, we're still seeing 240, 250 basis points of easing priced in by the end of next year. That's quite substantial, quite significant amount of easing. For if you believe the Fed outlook, that they're going to achieve a soft landing. So we've got a huge amount of easing priced in. And don't forget that amount of easing, 250 basis points in 15 months? Again, when you look at past cycles, that's consistent with either crisis, financial shock, or episodes of severe disinflation. There's been 4 episodes in the last 30 odd years when the Fed has cut that much in such a short space of time. Each one has been associated, as I say, with either shock or bouts of severe disinflation. The market is being asked to believe that this time is different. They're going to achieve a soft landing, yet with that amount of easing priced into the curve. Whether the Fed thinks that's a fair amount of easing priced in or not, maybe we'll get an indication next week. But it's a bit of a paradox. And just one further curiosity on that. Even if we do get 240 basis points of easing by the end of next year, that's substantial, as we've just discussed. Yet, it would still leave the terminal rate in just about moderately restrictive territory, going by the Fed's estimates of R-star and where they think the long-term neutral rate should be. So on the one hand, you could get a huge amount of cuts in a short space of time. You think, oh no, what's happening? Where's the economic or market shock? Yet it's still consistent with a reasonably just about restrictive rate of policy. So, pays your money, take your choice.
Okay, what do you think Europe's going to do, ECB, this week? Continue their cuts? The euro has come off a nice rally. We've had a nice rally. We've from 108, 107, and we're pulling back. I'm looking to buy a pullback here. What's your view on the ECB? What's she going to say?
So you're looking to buy the euro here at about 110?
Yeah, between 110 and 109. Yeah, in that range. Looking for 115.
just before I came on, I was looking at the trade weighted euro, not euro dollar or anything, any of the crosses, but the trade weighted euro. And interestingly, it came as a bit of a shock to me because I don't follow it as closely as I used to. But the trade weighted euro 3 weeks ago was at an all-time high, the highest it's ever been since the euro was launched on 20th, 22nd of August. It reached an all-time high. So that tells you that the euro on a broader level is fairly strong.
Okay.
It may not be particularly high on certain crosses, but on a trade-weighted basis, it's strong. And you have to wonder if it was to continue rising, at what point would that get on the radar of officials in Frankfurt, especially given where the economy is, where growth is, inflation already is down in Germany, certainly down below target. It's 1.9%, I think, the last print of annual inflation.
Well, I'm
still
kind
a
of
bit
thinking,
higher.
I'm kind of thinking, the race to the base has happened in other currencies. I think it's the dollar's turn.
The dollar's turn to go down.
Yeah.
Again, if going by if you look at where the terminal rates are for these central banks, we're looking at 250 basis points of easing from the Fed, another 180 from the ECB, although the ECB has started and will almost certainly go again tomorrow. All that taken in, you're still looking at the Fed cutting about 50 basis points more than the ECB over the cycle.
Okay, so that takes away the advantage of the interest rate differential.
For the dollar, yes.
Yes.
I suppose you have to ask yourself, do you think the Fed will cut over the cycle more, 50 basis points more than the ECB?
Yeah. We'll see. I mean,
given where the economic cycles are, given inflationary pressures, etc. That may be the case, but if you look at certain numbers from the Eurozone, some of the broader metrics, you can argue that growth is slower there. They're flirting with recession, and disinflationary pressures in the Eurozone are probably stronger than they are here in the US. So again, that's one to mull over.
Okay. All right.
But that's on a longer term basis, of course. I mean, certainly in the short term, I think the Fed is certainly priced to move more aggressively in the short term. But if you look toward the terminal rates, then maybe the picture is not quite as clear.
Okay. Well, the former President Trump and J.D. Vance are talking down the dollar. And all right, do you know how a executive branch can move the dollar? They can have a view of what they'd like to see the dollar to do. How do they accomplish that?
It's a very good question.
I mean,
better watch what I say here, I suppose. And sorry, just popped into my head. Just going back to the euro. Don't forget, Europe is much more exposed to China than the US is now. I mean, there's been a gradual shift over the last 10, 15 years or so. The US is much less dependent in terms of trade links than it was, and the Eurozone is much more exposed to China. And you don't need me to tell you about the economic problems there and the fight with deflation in China. So if that wind blows from China, I think Europe is probably more exposed. Anyway.
Yeah, I could believe that. And then wouldn't also an appreciating euro also exacerbate the situation for them?
Exactly, which is why I said at some point that has to come onto the radar of the ECB, you would think. But I suppose they've got more pressing problems on their hands right now. But in terms of the politics of the dollar, well, it's an age-old one, isn't it? I suppose I think back to the 90s and the Clinton administration, Rubin as Treasury Secretary. What was his mantra? I can't remember the exact words, but we favour a strong dollar.
Yeah, they've all said that.
They've all said that, but I think under that, the Rubin Treasury sort of hammered that home, and it kind of stuck in investors and markets' minds whether it was valid or not, or whether it carried any weight. But whenever our US Treasury Secretary back then said, just a reminder, we favour a strong dollar or a strong and stable dollar, it did have an impact, much less so now. And in fact, as you just said, certain candidates want the opposite of a strong dollar. They want a weaker dollar. And as you mentioned, the race to debase, will that get any traction? I'm not so sure. On the one hand, he's talking about a lower dollar, but then he wants tariffs, and which are probably inflationary. I'm just trying to think through the steps here. And an inflationary environment, then the central bank, the Fed, assuming it's independent under a Trump presidency, and that's another conversation, then the Fed would probably have to raise rates more than it would otherwise do, and therefore the dollar would, catch a bid. So there's lots of circular arguments there. But in terms of what can the administration do, I don't really know, to be honest.
So what do you think is going on
tax
in
policy, of course.
Okay.
There's all sorts of economic policies, tax policies to spur inflation or to spur growth that could have obviously a secondary impact on monetary policy. Fiscal policy, you could,
how about tax policy, like taxing unrealized capital gains would create, money goes to where it's treated best. So are people going to want to trade the U.S. market if they're, subject to that kind of rule? I think you'd have to be a U.S. citizen, but that could make other markets that are more liberal be more attractive, and money flows out of the U.S.
Yep, that's certainly possible. Although we'd have to see it in practice. I mean, when these kind of proposals are put forward, there's a lot of hot air, and people say, people are going to leave the US. But is that the case? I mean, would that be the case? I suppose the proof of the pudding would be in the eating. I mean, would these multinationals in Silicon Valley and corporate America, would they up sticks and go elsewhere? Possibly.
Okay.
But possibly not.
Do you worry about what's happening geopolitically? I mean, Ukraine actually hit Moscow.
I did. Yes, I saw that. Yeah. That's kind of gone off the radar. Certainly from a purely market perspective, that has gone off the radar, and you can argue the rights and wrongs of that. And I'm sure tonight in the debate that will be thrown up again. The geopolitics and markets will at some stage have to pay attention. But I mean, I'm looking at things like euro dollar, treasury yields, Wall Street. I mean, don't forget, Wall Street was up until a few weeks ago was at an all-time high. And yet the Russia-Ukraine conflict is ongoing. There's heightened tensions, to put it mildly, in the Middle East. Political and economic tensions with China, there's Taiwan, and yet, as I say, only a few weeks ago, the Nasdaq and S&P 500 were at all-time highs. It doesn't look like the market is paying those factors much attention. As ever, nobody pays attention until they have to.
Yeah.
And who knows when that will be or what will provoke that change of reaction. But I think you can plan for. I mean, I get in my email inbox just over here hundreds of emails a day, hundreds of emails a week on geopolitical risk. And you guys as traders and investors, you know all about risk. How do you mitigate for that kind of geopolitical risk?
You stay.
I'm asking you.
Yeah,
you can't really do anything until you have to.
Yeah.
Is that a fairly?
You might have hedges on. You might own some gold. You could have hedges on. I mean, bonds have been acting pretty good. Look at this chart, Jamie. It looks to me we're really threatening a pretty important breakout over par and TLT.
But I mean, I'm talking about long-term risks. The threat of, for example, World War III or a US conflict with China, for example, or with Russia.
Yeah.
I mean, that's always a risk. But do you trade on that on a daily basis, weekly basis, a monthly basis? Probably not.
Yeah. But maybe what's happening, I think people are mostly in the market. The high flyers they're coming back, but the Mag 7 took big hits as people were rotating into defensive issues.
It's defensive,
and,
smaller caps.
and so bonds have been doing well, gold has been doing well, utilities have been doing well. SPLV, which is a low volatility S&P, they've been piling into. People are positioning for risk off. That's the way it looks.
That's fair. And as you mentioned, all of those are certainly in play, and the bond market is the obvious one. The classic safe haven is the bond market. Do you think the bond market is a bit rich now? I've seen a few notes, Citi amongst others, just in the last few days, saying that they're going tactically short just because it's overbought. Maybe I think the 10-year.
Okay.
On a short-term trade, perhaps. But
yeah, well, here's a 10-year yield. I mean, it's trying to hold this level.
370.
Yeah,
370 in a 10-year.
And that was actually the target off the formation was 370, and it, possible little double bottom. I don't think this is a low yet in yields. So I disagree. But what's interesting in yields, what's new, is that we're uninverting.
Yes,
right,
the
Jamie?
curve is.
So we talked about, attacking this topic, and people said it's really not. People say that it's not when we're inverted that's a problem for financial markets.
It's when it flips.
Yeah. So, do you think that this is an important turn?
Yes, I mean, yes. Sorry to interrupt, but
no, go ahead.
Absolutely. The curve, the 2s 10s inversion has been classically held up as a signal that recession is on its way. But as you just said there, what signals when recession is more imminent, is when the curve goes back the other way, steepens, and quote unquote normalizes. Like many things, many playbooks, rules of thumb, and economic models and standards, which we held to be true over the last several decades since the pandemic, excuse me, many of them have been either thrown up in the air or ripped up completely. Is that the next one? I mean, is the yield curve probably as a signal? Time will tell. But if the disinversion and normalization of the curve still stands as a kind of guiding light, then it's kind of hold on to your hats time over the next sort of 12 months or so. I'm just looking, as we're talking there, another curve is the difference between the 2-year yield and the Fed funds rate. I don't know if that's one that you follow closely, but that is heavily inverted. Obviously, the 2-year yield has sank quite dramatically. And that inversion is now about 170, 175 basis points, which is the most since 2007, and one of the biggest inversions going back about 40 years. And again, each of those inversions has coincided with quite severe economic or financial shock. So between the 2s 10s normalizing and the Fed funds rate in 2-year going the other way, I think the yield curves are telling us that we're in for a rocky ride in the next 6 to 12 months or so.
What do you think that Jay Powell is thinking? He doesn't have a job if former President Trump wins. So is he thinking about his legacy right now? Could that have influenced why he's acting now? Because it's possible that his term will be terminated by Trump.
Who appointed him again? Was it Trump?
Yeah, Trump threatened to fire him last time. Yeah. He wanted lower rates. He was bullying him and that was during the beginning of I'm not even sure if we were already we weren't even in a tightening cycle, and he wanted lower rates. So yeah, he stated that he wouldn't keep Powell.
Right.
But he changes his mind.
He does. And I think Powell, I mean, if he's thinking politics, then he will probably go 25. I mean, he wouldn't want to do 50 next week, because if I'm right in saying the meeting following in November is just after the election, is that right? It's the day after.
Yeah, that's right.
2 days after. So he could, I mean, to sort of to try and stay apolitical.
Right.
He might go 25 next week, and if the market pricing is correct, 100 bips by the 110 by the end of the year, that implies that at least one meeting must have at least 50 basis points of cuts.
Right.
He might save that till after the election. In terms
Right.
of his longer term legacy, I did a piece about a year ago or so, just throwing out the question, not saying either way, but just raising the question: if the Fed can achieve a soft landing without recession and a huge spike in unemployment, would Powell go down as one of the most successful Fed chairs in history? We'll throw that open to you. And I think if he manages it, obviously people say Volcker, many people say Volcker is the greatest Fed chair in history. Of course, his action came with a heavy price in terms of unemployment and recession. If Powell manages to get the soft landing this time around without a recession, I think that would be his legacy. Whether or not he's fired a few months after by incoming President Trump, I'm not so sure. Again, I'm not saying he would be the greatest Fed chair in history. I'm just throwing it out there as a question.
So he could save his bazookas for after the election. He could lower expectations by going a quarter, and then after the election, if we'll have more employment data,
more employment numbers, and we'll have again going back to the SCPs. The staff economic projections, they'll be revised next week as well, and they'll give an indication as to the longer term thinking of the FOMC and what we can glean about the policy path from that. So yes, more employment data and the SCPs.
Okay, you know what I'm most concerned about, Jamie, is there's not a growth engine to pull the world out of any kind of recession. In 2008, the Great Recession, China was still growing. And I think they were a big factor in helping us come out of it.
Absolutely.
Okay, the world, right? So perhaps the opposite is happening now. They were able to drag us into it, out of it, and they're dragging us into it.
Well,
starting with Europe.
Huge engine of recovery back in 08, 09, most certainly. And let's not forget the trillions of dollars of Fed and Eurozone and G10 stimulus, whether it be monetary and fiscal. That certainly helped, as it did after the pandemic. But you're right, China's no longer that engine of growth that it once was.
There isn't one, right? Europe, Asia's, Latin America.
Which is why we may be, we've been saying it for many years, and when the push comes to the shove, it may turn out to be the case, but we're all turning Japanese in a way, aren't we? Because if we do go into recession or downturn and there's no obvious way out of it, it's back to fiscal and monetary policy, isn't it? So fiscal spending, despite the all the problems that entails, and if the Fed, I think, again, I keep banging on about it, but one of the big lessons from 08 and 2020 is if in needs in times of crisis and there's no other option, the Fed's going to step in.
Okay. All right. Well, that's my takeaway.
Go big and ask questions later. I think that's what 08 and 2020 told us. And I don't see any change in that mindset from the Fed. Okay. If the situation requires it. I don't think we're anywhere near that just yet. But if there was to be another crash, they would go big again and ask questions later.
We're all turning Japanese by Jamie McGeever.
Of course, the irony being that the BOJ now is moving the other way. They're finally, after 20, 30 years, starting to tentatively take the first steps towards normalization, but they're doing it rather cautiously, understandably.
All right. Well, you guys just had a taste of what you could get if you go to Jamie's writings. Is there a specific place on the website for people to go to, Jamie, to get your articles, or do you tweet them out there? What's the best way for people? What's that? Reuters.com.
Reuters.com. Yeah, and just
okay. Is any of it free?
All of it's free.
All of it's free. Okay.
On the website, on the Reuters.com website. All free.
All right, Jamie. Well, there you go. So, I bring Jamie in because I think he's important for us to have a grasp on what's happening with the Fed. And interesting interview again, Jamie. You always come through. So it
Well,
was
thank you
really,
very much, Dale. It's fantastic to be back as well. And
yeah, I always enjoy your giving spirit to come here and edify our community. We're grateful for that. So uh, best to you, and you and I will be talking after the Twilight Zone election in December.
yes, I hope so. I hope
Okay.
so. I'll be glad to come back if you'll have me.
Yeah. Yeah. All right. Jamie McGeever, everyone, and you could follow him on X at Reuters Jamie. Go to Reuters.com to keep in touch with what Jamie's thinking. Take care,
Thanks
my
again,
friend.
Dale. All the best,
All right.
everybody. Bye-bye.
Thank you. Jamie McGeever, everyone. That's a wrap. You can join the team in 15 minutes on the Morning Edge. Good hunting today, everyone. See you tomorrow. Don't just count your pips, count your blessings. Adios. Thanks again, James.